Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at none other than Playstudios, ticker symbol MYPS. We're going to see if the stock deserves to be at $1.50. We're going to see what institutions and hedge funds are doing. We're going to be doing some advanced charting as well on the beloved Thinkorswim. As you can tell, I have already done some charts. Just a heads up, I do own over 50,000 shares of Playstudios. Not at the $1 average, unfortunately, but it's now at a point where I can just dollar cost average every week, 50, $100, and not have to think about it. So I'm not going to let my bias show. We're going to run through our typical stock price projections, see what insiders are doing, and give an overall view of what we think of the company. Honestly, TLDR, not really impressed by the CEO at the moment, but we'll get there. So without further ado, let's go ahead and shrink my head. All right. So Play Studios was a SPAC originally. I has had some good times, had some bad times. Um, we can see higher high, lower low, lower high, lower low, lower high, lower low. So we're essentially stuck in that pattern. Let's look at some other items. So we do have the RSI at 30, which is in favor of the Bears. The Bears. Looking at our momentum, I mean, it's been pretty weak for quite a while, not gonna lie. Looking at our money flow, looks like money flow has fallen off a cliff, but we will check fintel.io, this site up here, because Finviz does not stay up to date as Fintel does. Fintel processes SEC submissions and filings, and it shows up the next day. And we can see our relative momentum indicator is basically scraping the bottom of the Pacific Ocean in the deepest parts, probably down there with some shipwreck, fish skeletons, etc. So obviously this is with the Bears. Looking at their financial data points, we can see their sales. It's going up and to the right, but we can see 2023 they did 310 million. 2024 they are at 303 million. They are entering a plateau, and I think their stock price accurately reflects that. Shares outstanding, not a fan, but I will call out. Back in 2020, there was 93 million shares. 2023, 134 million shares outstanding. Fast forward to 2024, there's 118 million shares outstanding. So it does go to show that there is some natural and organic accumulation of the shares by hedge funds and retail resources like me. And I promise I'm not the only one buying the stock. Earnings per share, just yeah, it hasn't really recovered. We can see it's been going down and it really hasn't curved up and to the right, which we like to see like this. It's kind of just going like so we'll see what happens for the rest of the year. However, if you listen to the latest earnings report from the company, it's pretty abysmal, pretty dry. So I believe this stock deserves to get what it has coming to it, and I think a dollar this area is valid. We're gonna run my stock price projection here. I only include the market cap in the calculation if the company has over $1 billion market cap. We can see this company does not. All right, income they are negative 19,240,000. And sales 303,390,000. Before I go down, let's just take a peek at some data points here. Not profitable, not good. I mean, not bad. They're a growing company, small cap, whatever. Quick ratios over one, which we love to see. Debt and long-term debt is going down, so they're addressing debt, not much debt at all. Sales past 5 years, barely positive, but positive nonetheless. Gross margins 59%. That is absolutely incredible. We do have some insider selling. Institutions are buying, it looks like. Average volume, great. Short float, nothing crazy. So no real red flags here other than they're not profitable and their sales are going down for 2024. So going on down to complete the rest of our calculation. Um, we don't have our other quarterly data here, but we can see they're kind of stagnant, which is what we saw up above. Um, Cost of goods, I mean, they spent 29 million to make 72 million. So we don't really have much historical data to go off of, unfortunately. But we can see last quarter they spent less than $1 million more and made over 5 million. So a little bit of a dislocation with the company and the customers. I use this app, but I don't pay for the in-app purchases like the tokens, packages, etc. Looking at their gross margins, they're hanging around the high 50s, low 60s. Well, I wouldn't say low 60s. Um, we did have Microsoft. So Microsoft did sell their stake back to Playstudios. Playstudios did buy the shares back from Microsoft. So um, there was a considerable amount of the company repurchasing its stock. So that's a plus. On with our calculation. So they have 106 million in cash. Just trying to make this a little bit better. Okay, 106 million in cash, 300,000. Total debt, pretty low, 7,870,000. Look at total assets, 333 million with total liabilities at 69 million. That's butter right there. Assets dwarf liabilities 5-1 at least, I think. Potentially around 5, so that's great. Um, let's see any other items I can call out. They did increase their debt a smidge. Um, and assets did go down. Liabilities went up smidge. So again, no red flags. We can see the company is getting their stock options. Good for them. Back on with our calculation. So we have 118 million 200,000 shares available. I think I did that right. And we get a price target of $3.24. Analysts have a price target of $4, so not too far off. Does that make this undervalued? Yes, with the caveat. If I did not have a position, I would maybe dollar cost average a little bit. Me already having a large position at a higher average price, I'm just dollar cost averaging 50 to 100 a week. So I do have it at 50 now, but I'm gonna update it to 100 and just continue to buy weekly until this gets back to around $3, just because that's where my sweet price target is with my calculation. Um, so that's that. We do have a target price that is above our current price. So if institutions see the value, they will hold more than 30%. FinViz, again, shows older data. They're showing 30% here. New data and up-to-date data shows 38%, which is good. And we do see all-time high ownership here. So that is something to note. So that is a good thing in my opinion. We can see Activision sold their shares, but they were repurchased by the company around $1.95. And then you can go down here and see Geode. It looks like they added to their position, but the value is down. Renaissance Technologies, love them. They added 21%. Connor added 23%, but their value is down 7%. PNC added 183 shares. So you can go down and check for yourself. The LA Capital Management, they added 63,000 shares, 139,000 shares, 28,000 shares, 12,000 shares. So yeah, you can come back to this at your leisure. We do have this here, but I'm gonna go ahead. We're gonna start friggity fresh, and we're gonna change this to 2024. We're gonna change 24 to 2025. All right. So if you know me, I like to do the Fibonacci arcs. However, we do not know if the company has hit a official bottom yet. So let's just see what we get here. 862 is 150 our low. Let's find out. And I'm just gonna make sure it's snapped. 150, 862. Bueno. All right. Are these candles respecting the Fibonacci arcs? Good support, perfect test. Falls through. Great support, great test, great resistance. Tries to break up. Perfect resistance there. Not able to break up. Perfect, almost perfect support there. Breaks up. Good test, great test, and falls through. So as much as I want to say 150 is our low, 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 I think this deserves to go lower with how the CEO is running this company, unfortunately. Let's do some more charting here. So right here's our sweet spot. Okay, so we're trading in this downward channel. I mean, this is extend to the left. Great test, falls through, perfect support, great 9 out of 10 resistance here, 10 out of 10 support, falls through, 10 out of 10 resistance, 10 out of 10 support, falls through, perfect test. Right now the stock is at 154, so it is below our channel. Um, it can go, I mean, we don't really know how low it's going to go, but I mean, this company is cash. They make around $300 million a year. They have great business management in terms of the balance sheet, not in terms of the overall view, in my opinion. They did acquire Pixode recently. Not sure how I feel about that, but yeah, I my original thesis for investing in Playstudios, which has not changed, by the way. It's very important to know if your thesis changes in an investment, consider different options. My thesis has not changed. I believe with Playstudios, you have the casino, gaming, arcade, Tetris environment to earn real life rewards, whether that's uh, travel, not yeah, excursions. I mean, the list goes on, like food, drinks, hotel stays, and Vegas hotel stays kind of across the world. Um, Massages, like you name it. At one point they had electric bikes. I wish they had that still because I regret not taking advantage of that. But let's continue on. I digress. 862, and we're going here. This is our ultimate resistance. So the stock has had a very hard time staying above this purple line. We're going to make it nice and thick. That's not super thick, but you know. So yeah, we're coming to an apex area of opportunity right here where we have resistance and support converging. I believe, and I think we might get a throwback under 150 potentially. It's very hard to tell at the moment. In terms of other patterns that uh, I do see a couple things. I do see a potential cup and handle with this being the left side of the cup, a rounded bottom, potentially coming to a right side of the cup, $5 ish, maybe. I don't know. It could be 2020. It's going to be 25, 2026, maybe 2027. And we also potentially have inverted head and shoulders. We have our left shoulder here, our head, which is not done completing. It's going to come and eventually potentially hit a resistance maybe here, come back and do another U shape. This is what I'm talking about. Let me just, so there's our left shoulder, potential head, come up, and then potential right shoulder and a move up. So, and I'm just going to remove that because I don't like those. And I can't remove it with a control Z. So that's my overall opinion on this stock. Personally, my thesis, again, it's it's consumer. it's consumer based, my thesis. So it's Vegas gambling is getting a bit more expensive. Wages have been stagnant. The minimum wage has been the same for ever. People are going to seek out free gaming, casino, slots, bingo, blackjack. I mean, that's gambling. Anyway, like any of those, Playstudios has, and I think people could resort to that, and then using their gold tokens for actual potential um, travel, gaming, airfare, staying in the strip, you get table credits, game credits, slot credits, drink credits, food credits, comped rooms, etc. So that's my long thesis. It has not changed, and I want to own six figures of this stock before our next big boom, which is going to be 2030. And when I say the next big boom, think of the dot-com bubble when we had the insane run up, 2019 when we had the COVID, but we had the huge run up in 2021. So 2035 is what I'm targeting for six figure plus. I would love to have over 100,000 shares. If I can get to 200,000, that would be great. I think what would be a stab in the heart is if the company decided to be acquired at like $5. That would suck. I would be on top, cash positive, but I want to see this company, I want to see the fruits pay off. Andrew Pascal is the nephew of none other than Steve Wynn. Steve Wynn is a Las Vegas pioneer who's gotten into recent trouble. When I say recent, within the last 5 years, he co-founded, or no, he basically started the Las Vegas Strip boom. You've heard of the Wynn casinos. He no longer is affiliated, although it is still named after him. He does not own any position or stock. He did have to sell that and real estate. So, um, yeah, I'm optimistic about Andrew Pascal. He's been an entrepreneur his whole life. He's started businesses. He's worked in the casino industry. So, um, yeah, given this another 10 years, continuing to dollar cost average at $1.50, I think this is an extremely beautiful opportunity. And that's my thesis. I mean, what do you guys think? Do you think people are gonna not gamble in person as much as they are as time goes on and costs get more expensive? To me, what I kind of envision is men, women, people, whatever, drinking a nice glass of red wine or a cocktail, a beer, chilling on their patio or couch or wherever they find peace, and playing casino games at home. They have slots, bingo, blackjack, you name it, Tetris. And the Tetris also allows you to get points as well to redeem for real life rewards. So that is my take on Playstudios. Love this company, don't love the management's decisions at this point. Some headwinds, but I do think long term, next 5 to 10 years, I'm definitely going to continue to add. I think once I cross 100,000 shares, I will make a video, special video, just to see where we've gone and where we are going. So if you made it this far, consider subscribing. I really appreciate you for watching. Leave a comment, leave us a thumbs up. It lets YouTube know that they need to push my content out more, creates engagement. And yeah, take care. See you tomorrow.